yesterday. Avinash Gorakshakar and Rohit Srivastava are there with me. Thank you so much, gentlemen. Avinash, before I enter into more detailed place, just before markets open, give me your 3 picks very quickly and then we'll discuss them in detail.
In fact, my first 3 picks would be something like a Crompton Greaves Consumer Electronics. I think we believe that the power to all villages is going to be the big theme here. These are medium-term calls. We could expect a target price around 195 over the next 12 months. The second pick is Arvind. Arvind reported very strong numbers yesterday, and I think the branding story is going to get further momentum. Here we could look at a target of around 380 again from a 12-month horizon. And my third pick would be Jamna Auto from the auto component space. Here, not only the GST benefit, but yesterday numbers which got reported for Q1 have been very strong. So here we are looking at a target price of 235.
Okay, about 40 seconds left. Avinash, I see that Rohit, I see that you are a little bearish or cautious at the moment. Anything that you would buy?
No, not really. We are not looking at any long side positions at this moment.
And the banks that you mentioned and Infosys, these are for shorting, or these are just cautionary things that you're talking about to take profits?
No, we are looking at the sell side in banking, in tech stocks, and maybe in autos as it develops. But at least banking and tech, maybe metals also might join that list. So I think we are looking at the sell side.
We're looking at the sell side on these. Okay, we have just about 10 seconds left. There might be a bit of a bump on some of those metal stocks today because, as we said, that steel, especially because of the MIP, but that could be a momentary thing. I'm going to discuss this in detail with our guests and understand. Okay, let me go straight to Rohit. Rohit, we see a sell-off in the beginning and then a bit of a buy comes in, and it almost looks like every day we look at the numbers that come out and domestic institutions sell, foreign institutions tend to buy. The ETF funds seem to be endlessly coming into India.
No, but this data has been inverted almost forever. I mean, the time when FIs are selling, then the DIs are buying, and the DIs are selling, the FIs are buying. So I don't think that data itself you can look at and come to any conclusion in terms of what the market is expected to do. Okay. What you'd really want to look at is what sentiment is doing. You'd want to look at the near-term momentum and take it on that sense. And secondly, also you need to take a call whether you think this entire move that we are developing from 6,800 for the last 5 months is essentially part of a bull market and you want to buy every dip, or is this a trading market you want to be in and out, or you want to book profits and be alert about what might happen next. So I think I still belong to the second camp, and I don't really think you're in a bull market. And in that sense, all our short-term momentum indicators on the sell side, some of the sentiment indicators have reached an extreme. I mean, if you look at something else, which is FII positions in the index futures market, they are at near their highest levels that we've seen, over the entire data available from, 2012. Every time they've reached around this range, you've typically seen a short to medium term kind of a top in the market. So, I mean, it's also similar to what we'd seen when you were at 9,100. You had some, 2.5 lakh contracts long out there. You are at around 2.4 2 days ago. You're at around 2.28, which is pretty much close to the highest readings on the total positions. So they're excessively long over there. My sense is at some point that would unwind due to some reason or the other, and you should essentially be more careful than just one-sided bullish at this point of time.
Okay, you do have some short calls on sell-side calls, and just give us the logic behind them. Let's start with the private banks, for instance, ICICI Bank, Axis Bank.
Yeah, they've been the weakest private banks. I mean, if you see, the best performance has essentially been in, Yes Bank or IndusInd Bank. And Axis and ICICI were the weakest. ICICI is probably the weakest of them all. It could not take out you could almost call it a triple top that it made over the last couple of months. It couldn't get past that. And it fell inside that level, 4 to 5 days back, and has been falling one-sided. So I think you're getting some bounce back today. Maybe it bounces for a another day or two, and I think that would probably give you another opportunity to sell into ICICI Bank. So not right away, let this bounce be done, and then we'd look at selling again. So that would be one. Axis Bank is another one which
do you have any entry point for a sell? At what point would you sell, and what would be the target on the downside, and what is the stop loss on the upper end?
No, we'd not put that right now because
Okay.
we don't know how much it's going to retrace. When you look at a 5-day fall, it could retrace 50%, 60% of that. Only then you'd really have a stop. But my sense is that whatever gains that you've made over the last 4 to 5 months, I think those can be given up the way the banking sector is shaping up. So the second one, like I was saying, Axis Bank, what we've seen is, last year it fell pretty significantly because of various reasons. And this pullback is essentially retraced around 66% of those all those losses that it made in the last 4 to 5 months. It has recovered that. And we are at that level. And I think you should start seeing weakness in Axis Bank. We've seen some selling in the last couple of days. And there too, similarly, if you see any kind of bounce back, you'd look at building a sell position. There, I think in the short term, it looks like we are more or less done with the upside. So I don't think there's too much upside. We don't mind. I wouldn't mind even being short at this current level. And my sense
on
again
this,
is that
do you have a target at all?
Yeah, the targets would be way lower. I mean, you could say it could be 10%, 15% down from your in the near term, near to medium term. Over several months, my sense is it could be lower, but let's start with that to start with, and then see how it goes. But and the upside might just be limited to 5, maybe 2, 3, 4%. I don't think you'd see more upside than that.
Okay. You also have a sell call on Infosys. Is it again on the current levels, or again one has to wait?
Yeah, see, after the results, it's been attempting to move up. It's not really been able to move up. It spent around 7 to 10 days in the same range. So I think there would be very little upside. Current levels, or maximum 1% upside within that range. I think it remains a sell. And my sense is that it would start heading lower towards maybe closer to the 1,000 mark is what I would look at in the next leg of the decline for Infosys.
So closer to 1,000 from about 1,070 right now. All right, Avinash, I managed to get your calls in, but if you could just give us the logic behind them in more detail. Crompton Greaves Consumer. Let's start with that.
Yeah, I think the logic for Crompton Greaves Consumer Electronics is largely because I think power distribution to villages has been a very strong theme, and we have seen the government acting very aggressively here. As far as the business is concerned, I think it's a very strong business model. They are market leaders in fans, lighting, agriculture pumps, as well as appliances. I think more importantly is the core business has shown tremendous growth in the first quarter post listing. We have seen a 15% top line growth and a 18% bottom line growth, and more importantly, the volume growth has come in largely from fans and lighting. And now post GST, our sense is that whatever benefits come in will obviously be large, because fans and lighting are a segment where there's a lot of large unorganized sector present, where pricing benefits can come to Crompton Greaves Consumer. More importantly, we expect a good earnings growth of at least 20-25% over the next 2 years. So markets are going to look at this factor more, and our sense is that on any dips this could be bought for a target price of around 195.
195 target price. You did tell me about Jamna Auto, why you think it's a good call. Arvind, that's the one we left out. Could you give us a little bit more detail?
Arvind, our senses is purely now getting like a branded story. In fact, yesterday on the management call, they clearly said that the branded business is going to grow in growth numbers of around 25 to 30%. The domestic core business, which is textiles, denim business, would grow by 8 to 9%. And I think with the good monsoon, the main input cotton is going to be available at a reasonable cost. More importantly, if you talk about the kind of brands which Arvind retails, our sense is that there could be a very strong re-rating here with a strong earnings growth. So clearly both earnings growth as well as re-rating could possibly be seen in the next couple of quarters, and these levels are definitely attractive from a 12-month view.
All right. I have one final question to Rohit. We've got through the stocks. Rohit, the dollar index, what do you make of it? What is your call on the dollar?
Yeah, I think that's the most important question that I've been talking about even in my various updates because my sense is that the dollar really bottomed in more than a month back. And that trend continues to be up, which means my expectation is the dollar index goes back to closer to the 100 mark. There's been a lot of talk about the potential, but essentially if you just look at it, all the central banks are looking at weakening their currencies. You've just seen that happen with the pound yesterday.
Right.
And so the trend essentially remains towards a strong dollar. The US is still not talking about weakening its own side. In fact, it's talking of still strengthening, even though it may not have done much. But the talk essentially remains a strong dollar from both sides. And so you should expect the dollar index to actually move much higher from here. And the immediate impact of that is on commodities, which we're already seeing. We've seen oil top off at $50 and lose $10 from there. We have seen even copper peak out at around $2.28 and it's down to around 2.16 yesterday. So essentially the weakness in commodities, strong dollar theme, which was the trouble spot of 2014-15 is actually back on the table. And the markets are still not completely recognizing it.
Right. That's a very important point to look